If Donald Trump announces a 50% tariff on copper imports, the impact would be significant and wide-ranging, both domestically and internationally. Here's a breakdown of the major consequences. 1. Copper prices will rise in the US. Tariff equals extra cost on imported copper. Importers will likely pass this cost to manufacturers, leading to higher copper prices domestically. Could increase inflationary pressure, especially in industries that depend heavily on copper like electronics, automotive, especially EVs, construction, renewable energy, solar, wind. 2. US manufacturers and construction will suffer. Higher input costs will hurt US industries. Smaller manufacturers may struggle with profit margins. Infrastructure and real estate developers may delay projects. EV companies like Tesla will face increased battery and wiring costs. 3. US copper producers might benefit in the short term. Domestic copper producers, e.g., Freeport-McMoRan, could see boosted sales and prices. But the US doesn't produce enough copper to meet its demand, so relying on domestic supply alone isn't realistic long term. 4. Global trade tensions and retaliation. Major copper exporting countries, e.g., Chile, Peru, Canada, Mexico, may retaliate with counter-tariffs on US goods. Could trigger a new round of trade wars, especially if tariffs extend beyond copper. 5. Renewable energy and tech sector at risk. Copper is critical for green technologies, solar panels, wind turbines, EVs, and power grids. A 50% tariff would raise renewable energy project costs, slowing down the energy transition. Tech manufacturers, servers, semiconductors, will also face cost pressure. 6. Market volatility and supply chain shifts. Traders might speculate aggressively on copper futures, causing price volatility. US buyers may try to reroute supply from countries with exemptions or shift to scrap copper, if available. If Trump imposes a 50% tariff on copper imports, the global impact would be significant and disruptive, especially considering copper's essential role in global industry and clean energy. Here's how it would unfold on the world stage. Global impact of a 50% US copper tariff. 1. Hit to major exporting nations. Chile and Peru, the world's top copper exporters, would lose market share in the US. Revenue from copper exports could fall, hurting their economies. Exporters may look to China, India, and Europe to redirect supply, increasing competition in those markets. 2. Global supply chain disruption. The US is one of the largest copper-consuming nations. Supply chains involving copper-based goods, e.g., EVs, electronics, would need to shift sourcing, reprice products, or delay production. Logistics costs and shipping patterns may also be affected globally. 3. Trade tensions and retaliation. Countries affected by the tariff may retaliate with tariffs on US exports, agriculture, tech, energy. WTO complaints or sanctions could ignite broader trade disputes, especially if other metals, e.g., aluminum, lithium, are next. 4. Global copper prices rise. Even though the tariff is US-specific, global copper prices would likely rise due to market uncertainty, anticipation of further tariffs or supply shortages. Higher prices globally equals inflationary pressure on manufacturing, construction, and green energy. 5. Renewable energy and EV projects slow down. Copper is essential in wind turbines, solar panels, and EVs. Higher prices reduce profitability and momentum of global green transition efforts. Countries relying on US for technology exports, e.g., Germany, Japan, South Korea, could also suffer downstream effects. 6. China and others gain strategic advantage. China, the largest copper consumer and refiner, may strengthen ties with Latin America and Africa to absorb surplus copper, undercut U.S. prices globally and dominate copper trade routes. Countries like India, Indonesia, and the EU might also benefit from U.S. supply disruptions, getting copper more cheaply. 7. Financial markets react. Such a drastic policy could increase volatility in commodity markets, drive investors toward safe haven assets, like gold or bonds, cause currencies of copper exporting countries, e.g., Chilean peso, Peruvian sol, to weaken. Amid increasing global economic uncertainty caused by U.S. tariffs, China's manufacturing sector has again demonstrated its long-term stability and resilience. This was evidenced by Chinese buyers' copper purchases despite recent market volatility, reinforcing the sector's role as a stabilizing force in global trade and industrial supply chains. Copper prices plunged as much as 7.7% within 15 minutes of the opening on the London Metal Exchange, LME, on Monday, and the initial drop prompted Chinese manufacturers and importers to snap up copper, traders said, according to a Bloomberg report on Tuesday. Copper is a crucial raw material widely used in industrial production, and is traditionally considered a barometer of the global economy. Over the past few days, global copper prices have experienced one of the most significant sell-offs in years, with LME copper prices dropping 11.19% last week. On Friday, the price fell by 6.9%, the largest single-day drop since March 2020. This sharp decrease is largely attributed to the U.S. announcement of reciprocal tariff policy on April 2, which has severely weakened the demand outlook for copper. Under such a volatile market environment, the significant increase in copper purchases by Chinese buyers reflects the stability of China's manufacturing industry. Chinese manufacturers, through reasonable procurement strategies, ensure that their production in the coming period will not be disrupted by copper price fluctuations or supply shortages, thus maintaining the continuity and stability of production. Moreover, China's copper buying is also closely aligned with China's policy orientation of stabilizing the economy and the manufacturing sector. This year, the country has explicitly emphasized the focus on stabilizing the economy and the manufacturing sector, and expanding consumption. As the world's largest copper consumer, accounting for more than 50% of global consumption, China's appetite for the metal is deeply embedded in its infrastructure projects. Power grid upgrades and booming electric vehicle sector. For instance, major construction projects have been announced recently across the country, covering transportation, energy, water conservancy, industrial transformation, livelihoods, and new infrastructure, all of which will directly boost demand for copper. Furthermore, as Chinese automakers, particularly those in the new energy vehicle sector, continue to grow and expand internationally, the sector's demand for copper will also remain robust. These market developments clearly indicate that Chinese companies, guided by a series of supportive policies, remain confident in the outlook for production and market prospects. The U.S. tariff policy has seriously disrupted the normal operation of the global industrial chain, triggering drastic fluctuations in the international market. The volatility in the copper market is merely a microcosm of this global trade upheaval. In such a complex, volatile, and uncertain market environment, Chinese manufacturers are proactively responding to uncertainties in the industrial chain. This coping ability stems from the rich experience accumulated by China's manufacturing industry over the years in continuous battles with market risks. Chinese manufacturers can quickly find alternative solutions when raw material supplies are restricted, rapidly adjust product structures when market demand changes, and increase research and development investment to achieve breakthroughs in the face of technological bottlenecks. This comprehensive adaptability has enabled and will continue to enable China's manufacturing sector to maintain a relatively stable production pace amid global industrial chain fluctuations. For a long time, as a vital part of the global industrial chain, The stable development of China's manufacturing sector is of great significance for the stable operation of the world economy. In the past, when the international market was mired in difficulties due to various factors, China, with its huge production scale and stable supply capacity, greatly helped ensure the continuous supply of various products in the global industrial chain. In the context of increasing global economic uncertainty, Chinese manufacturers' ability to respond to various situations will not only ensure its own stable development but also make significant contributions to the stability of the global industrial chain.